Welcome to Real Vision Crypto. I'm Ash Bennington. I'm joined today by Sudhu Arumugam, co-founder and CRO of CoinFLEX. Sudhu, welcome to Real Vision.
Thanks, Ash. Pleasure to be here.
It's a pleasure to have you. Sudhu, we were talking a little bit offline about your background. Tell us a little bit about your story.
Yeah, I studied at the University of London and joined the City of London as a derivatives trader, essentially. And so I spent 20 years trading options, everything from fixed income to equity options, from where I ran sort of single stocks trading team at Merrill Lynch to being a senior trader at DRW and other sort of market making and prop shops that are kind of global businesses to this date.
Yeah, so you obviously have a significant background as a trader at some of the largest hedge funds. Tell us a little bit about how you found out about crypto and why it so entranced you.
Yeah, so I first started reading about it in 2017. So I didn't have the pleasure of the double-digit Bitcoin holders that who found it at sub $10. But essentially, I started hearing about it in early 2017. I was going to meetups around London, and there were a bunch of different, kind of interesting token projects trying to sell their tokens. And I would say, I would ask them, hey, listen, I'll send you some pounds to buy some of your tokens. And they were like, no, you need to send Bitcoin. And I was like, well, how do I do that? And of course, I was pointed towards an exchange called CoinFlow, which is co-founded by my partner here at CoinFLEX, Mark Lamb. And that's how I kind of went down the rabbit hole of crypto. And every time I look at something else comes up, and I suddenly became hooked, just like everyone else who has been on this journey.
Yeah. So tell us a little bit about CoinFLEX.
Yeah, so CoinFLEX is a crypto derivatives exchange. And what that means is that we are a futures exchange, just like the CME or in Europe, Eurex, for example, or ICE. And what it means is that customers can come onto our exchange and trade futures and other sort of yield products that we've introduced. So we have a bunch of sort of very, very unique products. We have the first yield-bearing stablecoin called FlexUSD, which is a very, very innovative product. But we also have very, very standard kind of futures trading contracts, just as you find on any other exchange.
So what are the geographies that you guys are based in?
So we are a Hong Kong operated business right now. We have a kind of a big team out in Asia. We've got teams across sort of Europe and Canada as well. And in terms of the customers we service, of course, we don't service the US yet. We will be servicing them from the end of March with the launch of CoinFLEX US, which is very, very exciting to us. But right now we serve pretty much the rest of the world, excluding obviously the kind of prohibited and sanctioned countries.
Yeah, give us a sense of what the volume is that you guys are doing on this exchange.
Yeah, so we are actually the first exchange to list a product called repo. And repo is a market in the traditional space that trades sort of $2 to $4 trillion a day. And it's a very interesting market in TradFi because it's only accessible by banks and the big banks and the Fed, i.e. the money centers, the JP Morgans and the Citi banks. In crypto, because of these the fact that we can democratize access to financial markets, which is what really interested me in this space in the first place, was that we could create a repo order book which anyone could participate in. So institutions like Galaxy and Genesis could trade with each other, but yourself and Raul could trade with each other or with them as well. And it meant that there were no blockers, there was no sort of artificial barriers to the retail public participating in financial markets. And we launched this repo market 18 months ago. It's a unique innovation by us. It trades anywhere from $5 to $8 billion a day. And it's growing fast. And obviously, this is something that we feel is going to trade hundreds of billions of dollars a day over the next few years.
Yeah, I mean, obviously, that's considerable volume now as you're just beginning to scale up. You mentioned the repo market. Give us the overview, the roadmap, the 50,000-foot taxonomy of what the product offerings are and how your customers use them.
Sure. If you look at sort of traditional markets and if you look at the two activities that are the most profitable for trading firms, for hedge funds, there really one is basis trading, and that is a spot to futures arbitrage. And essentially what happens is that because futures markets have leverage, they tend to sort of move away from the spot market because retail likes leverage. They like to kind of buy these futures contracts, and it creates arbitrage opportunities. And that's called basis trading. And for the last 25, 50 years, basis trading has only been available to sophisticated trading firms. And we have taken the benefit of physical delivery, which is a unique product to our futures contract, and tokenization on the blockchain to be able to allow this out as a simple one-click product to people like yourselves. And we call people like, both of us here are what we term passive capital. And what that means is that it's not our day job to trade. And so our mission is to create products that allow people whose day jobs is not to trade, i.e. passive capital, to access the same pool of trading opportunities as active capital. And so the first yield product is a yield-bearing stablecoin called FlexUSD, which allows you to participate in basis. And the second yield product that we have is called automated market making. It's a product that's been very popular in DeFi. There's about $60 to $80 billion deployed across it right now. And we're the first centralized exchange to bring it into futures markets. And there are a bunch of advantages for customers who do that in futures, namely that futures just trades a lot more than spot. There's cheap, there's no gas fees, there's no front running. And so FlexUSD and AMM Plus is essentially allows access to anyone in the world to participate in the same P&L and yield opportunities as the biggest institutions in crypto.
Yeah, so let's walk through both of those trades. I know there's going to be some redundancy for people here who already understand this, but I know for a lot of retail investors in the crypto space, they find, for example, the basis trade kind of baffling. Walk us through a couple of scenarios about why you'd want to put that trade on and what the advantages are.
When you look at a spot Bitcoin, and spot Bitcoin's trading at, say, 40,000, but yet the futures are trading at 41,000, $1,000 above. The reason, why would that happen? Why would you say, listen, why would someone buy it at 41,000 when they could buy it at 40K spot? And the only reason people do that is that you can't get leverage easily on spot, but you can on futures. So you get a lot of retail traders who are like, I know I'm overpaying for this futures contract, but I get leverage and I hope to make money by the short-term movement in Bitcoin.
And you think the price
for big trading firms
surpass the amount that you're going to pay on the leverage?
Correct, right? And so, but as a large sort of trading firm with a large balance sheet, you can arbitrage that opportunity all day long. You can buy spot at 40,000, on any exchange, go to the exchange that's trading 41,000 and sell those futures contracts and close that arb. And that hasn't been available because for several reasons. One is obviously balance sheet, but secondly, the fact is to do that trading, you have to be actively monitoring your screens 24/7. And obviously that's not physically possible as a retail individual. And this is where FlexUSD comes in, because FlexUSD is essentially tokenize that trade for you. So you deposit US dollars, mint FlexUSD, and your dollars get automatically deployed into this strategy in our repo order book. And so it means that, if you want to sort of passively benefit from this trade, you can do so. And it's something that's been a product that's been very, very popular. We've got about $3 billion that's been sort of minted and redeemed in this strategy on CoinFLEX. Currently, there's about $400 million of customer funds deployed into it. And these are people who could be retail, family offices, high net worth, and even sort of institutions who are not traders, and what they can, kind of mint and sleep, essentially. And we take the heavy lift away from you.
So typically the basis trade would be if it's trading, if the future is trading at a premium to spot, you short the future while simultaneously purchasing spot. And as that gap closes, you basically realize that gain because you know that there's the premium and you're going to be able to capture it. You're basically able to tokenize that strategy so that you can deploy capital directly into the token and essentially express that trade, get exposure to that trade without having to pick up both legs.
Absolutely, because our repo market enables it as a atomic transaction between the two.
All right, jargon alert to do. You have to define atomic transaction.
Atomic transaction means doing exactly what he's mentioned, which is that if you trade in our repo market, you're trading spot and futures at the same time. So you don't have execution risk. You don't have to go to two different places to synthetically do that trade.
All right, and let's talk about execution risk. This is the risk of price slippage between the two as you're doing it, but why don't you explain it from that perspective?
Sure. If I use an example like Binance to do this exact same trade, if you as Ash was to go onto your Binance account to do this trade because you spotted a price difference between spot and futures, you would actually have to go to their futures section and trade the futures. You would have to go to their spot market and trade the spot. And so these are two different trades that you're clicking and trading on. So, for example, by the time you've sold your futures and you went to buy your spot could have rallied. And, what you thought was $100 gap was now a negative $100 gap. So you've actually lost money. So it's all about execution. Whereas on CoinFLEX's repo market, if you see that $100 and you trade it, you're actually getting both legs of the trade as part of the transaction.
So how are you able to synthetically create this without the risk of slippage?
Because the marketplace that we created for repo means that you automatically trade that with the counterpart. So you swap a spot and futures with the other side. And the reason you may say at this point, Ash, why would somebody, for example, give away $100 on the other side of this to trade this with you, like a guaranteed $100 loss? And the reason is that they're arbitraging it for more than $100 somewhere else. So a trading firm may be willing to give this $100 away to you because he's making $500 on another exchange, and so you are getting arbitrage. But the fact here is that you're also making yield that you did not have access to anywhere else or any time else in financial markets.
For these riskless arbitrage trades where you can simultaneously buy on one exchange and sell on another, you need these deltas, these price gaps between the two prices. What are you seeing in terms of that in the market today? Are there those opportunities, and are they readily able to deploy capital to them?
That's a very, very interesting question. So when crypto started, crypto futures started getting very active in 2017, these gaps were huge. You would see sort of, 5, 10%, 20% gaps in price terms, gaps between exchanges. And so a lot of the original crypto trading firms obviously did very, very well in that period. Now what we're seeing in these arbitrage strategies is that it's becoming much, much tighter from a basis points difference perspective. So the original firms that kind of wanted these huge gaps obviously don't participate anymore. But what it means currently is that the high frequency trading firms, or HFTs, from the TradFi world still see the crypto edges as very, very fat compared to what they're seeing in equities or currencies. And for the new firms coming into the market, they see plenty of juice in this trade. So they are carrying on, really, really trading this in huge size, in billions of dollars. And so there's a new generation essentially coming in, which sort of sucks for the original firms because it's now becoming an arms race. Who's got the most number of servers, who's most number of devs, who's got the fastest sort of comms channels, etc.
Yeah, and for those who've never worked on a trading desk, the juice is the amount that you're going to make on the trade that we're talking about here. I remember back in 2017, there was a prominent trade called the Kimchi Premium, which was the delta between Korea and other markets. I think Korea and Japan was a common play. Japan and US was a common play. And I think, in fact, this is the way that FTX came up in the Alameda days. One of the trades that they were executing were these inter-exchange price delta trades.
That's correct. Sam was, as Alameda was, he was telling me that he was arbitraging the US Japan premium rather than the Korean one, I think in particular. Right.
Yeah.
Because it was very, very hard to do. But we're seeing the same premium trade going on right now with Russia, right? Because of the kind of sanctions and the issues across, the tragedy in Ukraine. Bitcoin prices in Russia last week were trading $20,000 above global prices.
I mean, that's
obviously closing that arbitrage down. Correct. But closing that arbitrage down is very, very hard, right? And that's why it exists, for the whole week, was essentially because obviously you have to be able to sell, move rubles, sell ruble for dollars, move the dollars back out to the West, buy your Bitcoins, send a BTC back to Russia, sell it into rubles, swap that back into dollars. And it was obviously impossible or getting impossible because of the US sanctions.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.